Okay, welcome everyone. It's Enrico Jenko. I'm the Signal. December 22nd. Weekend, Saturday. Doing some training. Well, I'm doing some training for myself. And I was looking at actually my loss that I took for this week. We didn't do too bad, but we hate to take when we do take a loss. We went about 22-1. We want to look at that trade that fell short. See why it fell short. So let me see what we got here. Let's take a look at it. Let's see what actually happened. It was at 110. The trade that fell short. Right here it was December 17th. So we're at December 17th right here. Let me go to the bigger chart. This is a bigger chart. Let me see what date is this. Alright, let's go to December 17th. Go to December 17th at about 12:30. So we get some time and I could actually go through it, take a look, see at what was happening at that time. That's it right there, okay. Alright, that's it on the 5-minute right there. This is it on the 15. Let me just bring this over here real quick. Bring that right there real quick, so I can see it on all of it. This is 15-minute. This is the 5-minute. And then this is just the 1 minute. Okay. That's what I'm looking at. Let's look at the whole thing. Let me get me out of here so we can focus up real quick, alright? Okay. Now we should just have the screen up. Alright. We was at the 110. That's the one we failed. The 110. So let's just look at what was going on leading up to this. I don't need the 15 right now. I just want to see the 5. I'm going to get back to, yeah, okay. Actually, let's go to the 15. Alright, this was a 12:30 candle right here. And let me move this because you might not be able to see it correctly, right? Alright, here's the 12:30 candle, upward movement of that candle, right? So we're looking at prices going upwards, right? So that's what I was looking at that time. Right here we see two-way trading come into play, right? And that's very important. Anytime you see two-way trading come into play, it's very important because of pressure. Pressure is a very important concept. Direct correlation with speed. Actually, I would even say speed is a derivative of pressure, and I'm gonna explain that because that's one of my biggest, or my biggest one points that I use, like points of reference to figure out good trades from opportunities that aren't so well defined. And I like to use pressure. So I'm going to talk about that later on because I believe it's going to have to do with a lot of with the trade that I might have that I lost. So let's just move on with it. Let's see. So this was right here, two-way trading starts to come into the picture. All right. After that, we see that prices started going up again. Remember, we're on the 15-minute chart, right? So that was that 1 o'clock. All right, so 1 o'clock, I'm looking at an upward move. Closed on an upward move. So these are the first three candles I'm looking at right here. Start at 12:30. Candle finished on a high. 12:15 candle. 12:45 candles, excuse me. Finished low, two-sided trading, right? So that means we, on both sides of the market, they're trading, all right? And then going to the 1 o'clock candle closing, that candle closed on a high. Market still moving. So let's take it in a little closer. Look at it on the 5-minute level really quickly. Now on the 5-minute level at 1 o'clock, let's get to the 1 o'clock. We're right here. This is the 12:55 and it'll close at 1 o'clock. All right. So leading up to this is pretty important stuff right here, I believe. Leading up to this, we have the market buying up a rally there, and this is where the two-way trading came in, starts to come in. It came in earlier, actually. Two-way trading always was present in the market. As soon as the market went over this candle, over the price of 26.16, let's just say. But at 26.16, we see a incline price move up, but we see two-way trading really start to set in on both sides of the candle, right? Very important for us to see that. Both sides of the candle. Then this 12:40 candle, two-way trading definitely set in with now the sellers trying to establish some level of dominance. 12:45, same thing. These candles are somewhat the same candle, right? Indecision in the market, erratic price movement. Price went up, down, went back up, came back down, but finishing upwards, right? So these candles that happen here reverse pressure, right? So this is a fight right here. This is a fight right there. A lot of times this fight will result in stalled action and not even this erratic movement. But right now you got this movement up and down. So 12:50, all right, I'm looking at this candle going up, and I see that now two-way trading is a little above. It's happening at 26.62 right now, right? Like to see that. I'm looking for the market to probably get to 63. That's what I was looking at. And let me do this too while we're at here. We're at this point, so we don't even see anything else, right? 12:30, 12:50 right here. This is 12:55. So let me actually find. It was the 110, I believe, was the one I'm looking at on December 17th. So, okay, let me just keep going through this now. At 12:50, I'm watching this increase right here. That's at 12:50. All right, let's bring it even more down, get closer to it. 12:34. Let's bring this all the way to the 12:50. This is the minute chart I'm looking at right now, and I want to bring this up to date right here. at 1250. 49. All right, this is it right here. This is the close at 1250. And what do we have going on here? If we looked in at the 1 minute, right here, 1243. I'm seeing at 2615. About that's when I start getting my next rally. When I look at these, I'm looking for them to go about 2 pips when they establish themselves, when these structures establish themselves. So 2615, I'm looking at least 17, right? So I get that initial push up to 17, which we see right here at the 1245 candle. 1243, 44. Yeah, this one closes at 1245 right here. So at that candle, we got another push up about 2616. I'm looking for at least to hit 2618 at that point. And the 1246 candle, I'm looking at the price continue up, right? At that point, with price continuing up, I'm looking for it to eventually make it to this point, right? Price actually does make it to that point, and you see the climax right there of that. All right, that's the climax of it. Price starts to weaken at the 1248. Open 12. This closed 1247. This closes 1248. So at this close, you see the climax, and this is all kind of together. You see a climax, and the market just continues down and finds again some strength of buyers start to happen at 2618. About now at 2618, we start to see two-way trading begin again into the market. Right at 2618, we can probably expect it to get up to 2620. That's what I'm probably looking at in the market, and I'm just relaying the information as I believe I was looking at it at the time. So of course, in a live market, it's moving, so it's a little bit more feedback and a lot more emotional mentally. So we get this drop here, but I see the support, or I see buyers come back into the market at that time, and looking at possible for them to buy up to 2620, I believe. Back up kind of the test where it just fell off from. Remember, we're in the holiday season, so market somewhat erratic while we're looking at all this. So as we move forward, let's see what else we got going on here. The next bar, 2618 brings us all the way up to that 20 mark, even to the 21 mark. That's the 1250 candle, right? It's very strong candle right there. Goes all the way up to the halfway point on that climax. At that point, what candle is that? 1250. I just want to see what that's looking like on the 5 minute real quick. Let's get up to that part right there. Here, that's that 1250 candle right there. That closes at 1250. This is that candle. This closes at 1251. This is that candle. This closes at 1251. All right, so we got that right there, kind of. In these last candles. Okay, now at the 5 minute, now let's see how this all progresses out. you see, if I'm looking, I always like to compare what's going on in the market as far as what are we looking at as far as price levels and what's the possibilities, where the pressure is at. Once again, we see the two-sided trading come into the market right here at this 26.25 all the way down to 26.22 about, right? We see two-sided trading start to enter the market again. So we got to understand that we're at the squeeze is at 26.22 and at 26.18, right? That's the squeeze that we're looking at. Let's go on to, this is back to the 1 minute. All right, at the 12:51, we look like we're going up to match this climax and to test this ceiling here, right? We look like we got strength to do that. So once we get up to 26.21, I'm looking to move up to 26.23 possibly. That's my that's what I'm looking for. All right, and remember my trade is at 110, so I'm just walking through it so I get the picture of kind of how it all went down for a fella. Here goes that at 26.21. I expected 23. It hit 23. After 23, I expect 25, and it hits 25. All in that one candle. So we can expect this candle move very quickly, right? So pretty quick moving candles. All right. Right at that 26.25, that's when we get market coming back down. Definitely no more two-sided trading right there. It's one-sided trading all the way down to the 26.21 level. Just about the same place that we started from to bring the market up. Right there, because we had a climax already, we had this climax kind of here, and then we beat that. We beat that. Now we get skyscrapers again. A lot of times when you get to those points, market move changes, of market changes and climaxes, you get skyscrapers, right? So we won't go too far into that right now, but let's go. We see a decline in the market. That's really what we're talking about right now. That this decline came at 25, right? And it brought it all the way back down to 22. All right, that closed at 12.54, and then we see a climax on the decline, right? Just a real sellers just jumped into the market, pushed the market all the way down to back down to 26.18, right? But the buyers brought it right back up. So at 26.18, we know there's strength there. We know there's some buying strength there, right? So two-way trading is between 26.18 and 26.22, right? Very big, large distance, huge distance for two-way trading. So all of that is erratic right there. Spider leg, very dangerous, right? Coming right off of that 12.55 to 56, decline continues, right? So market found strength at 26.21, and I mean at 26.18, market rises to 26.22. Again, gets rejected at that point. Another rejection. Two-sided trading, right? Rejected at 26.22, 26.21 buyers. So right now we're in a tussle. 26.22, 26.21, shall we say? Tussle going on. Sellers find dominance. They beat the market all the way down to 26.13. And buyers come back to bring it up to 26.15. We got a way to go. I'm at the 110 trade. right here, the sellers beat them all the way back down, all the way down to 26.13 or so. Sellers showing lots of dominance, beat the price all the way down to 26.11 and a half, 12, somewhere around there. Two-sided trading happening. 26.16, 26.12, all that two-sided trading going on. So we need to be careful around these points here at 26.16, 26.14 to 26.12. Two-sided trading going on at those points. Right? Now, let's come on, we're going down further. Strength of the market. Buyers show strength at 26.14 about. They should bring it up to about 26.16, right? Which they do, right? Remember I mentioned two pip moves because of this off the scalpers, and we'll go further into that. But we know that there was two-sided trading going on there, right? Two-sided trading. You see buyers become dominant. We expect sellers to be coming into the market there. That's what we're expecting, right? Sellers do come into the market there. They bring it back down to 15 and a half, actually all the way down to 15, right? So I'm expecting it to probably get back down to about 13, 14, possibly. It does not. Buyers show more strength at 26.15. Looking for 26.15 to about 17 now, right? So I'm looking for it to inch up more. So 1 o'clock. Sure enough, it does. 26.17, right? I'm looking for 26.19, right? A little short right there. So I'm expecting it to hit that 19, right? One-sided trading going on right now at this point, but at 19 I would expect two-sided trading to start coming into play, right? That closes at 102. More buying strength hops into the market at 19. So I expect it to go up to 21 at least. Does so. 21 is hit. Expecting 23 at least. Does so. Major rejection at 23, right? Doesn't make it up to this climax. Major rejection at 23. I look at that. And everyone else will look at that also. So that gets rejected. Two-sided trading begins at that point. 103 trade, major rejection at the same point at that 23, 24 mark. Major push down to the 26.2 mark. That's half of this candle. Maybe we're looking to get down to 26.19, possibly. This is a 13. Oh, this is 103. Close at 104. This one closes closes at 105. So I believe mine is the next one. So here goes that entire drop down actually. So you can look at this as one whole candle, because that's what it did. One whole candle worth of activity in 2 tries. So it's a little difficult for it to get down. It was more difficult to get down than it was to get up at that point. All right, so I'm looking at this strength right here, 26.18 about, looking for it to get up to 26.20, possibly, on the next go around, because this is where the two-sided trading starts to come into the market. 26.20 we see the market dropping down. 26.19 about, we see two-sided trading start to come back into the market. Okay, this is the opening right here, 105. This is the opening. We see at 26.19 about. We see that juice I was looking for probably. Market goes up from 19.20. It's at a funny place, so I already know I'm looking for it to go up from 19 to about 21. That's what I'm looking for. Let's see what happens. Market makes it up to 21. Market makes it up to 21. Right? Nicely up at 21. What time is this? This is closed at 107. So this made it up to 21. Two-sided trading starts to come in at 21. Right? Two-sided trading starts to come in at 21. The other side is 26.19. Right? So I know in my mind I'm looking at the strength on 19 as this starts to break up top. Okay, let's see what goes on. What is 1304? This is closed at 108. This is the tell-all right here. 26. This closes at 26.21.4. Closes up. Two-sided trading taking place. Two-sided trading taking place, and more so that go along with that two-sided trading. The two-sided trading is wide. It's wide two-sided trading. Two-sided trading that's taking place over 4 pips. All right. So this is, I see where I aired at, because I know that I probably went in at 26.19. Being at 26.19 is all the way down here. However, the two-sided trading that is going on, large area, 4 pip area, 2 on top, 2 on the bottom. All right. So let's move forward where I know where I would have been around. All right. Now, this is where I'm watching it. I know I see this continued up. And so I'm figuring that, all right, another strong power move from buyers. Right? Great. They move it up to 23 from 21. 2 pip move. I expect that. I'm probably in the trade, jumping in right about now. Right? And I want to say I gotta look, because I want to say this was 19, but I can't remember right now. Maybe it was 21, because I saw the move right here at 21, expecting it to go up to 23. So I would expect it to stay up around 22. If anything. So let's see how it goes down. This was the slayer right there. This was the slayer right there. So I did go at the 26.19, and it dropped all the way down. So if I had to say, what am I looking at that would gave us heads up, is 2 things. 2 things I would look at. First of all, I know that I'm getting a rejection at this price level at 23, because I've already gotten that before, and I know it's a climatic price level. Like, I'm expecting that prices will, when they fall from here, fall pretty hard like they had before, right? When I saw this broad, very, very broad, two-sided candle, that would have been helpful on that also. That would have been very helpful. If accepted this and determined that because of this, that anything else will be risky, and it's a matter of accepting that, so you don't have to be within this risk, because we already know that this is kind of like the ceiling test, and we're going to talk more about ceiling tests. This is more like that, a test of that, along with a psychological number, so you know you're going to get a push. You know when the two-sided trading comes in, you know you're going to get a heavy push down. I made the assumption, this is where you have this is where the problem comes in, when you make the assumption that the market can or will not do something. When you just, we're going to make assumptions, period. You're going to make assumptions in the market, period. That's what we do. We make some level of assumption in the market based on what we see. But I made the assumption that it was not going to fall that far, that fast. And it fell that far, that fast. And one of the indicators of that would have been this candle right here, because it showed such a large range of two-sided trading that I would have really taken heed to that, actually, because and it's plenty of reason to take heed to those. Anytime you see a candle that gives back like over half of what is done, it's a reason for that. None of these candles happen by perchance or coinkadink. Everything that is going on in the market happens particularly for a reason. And that particular drop right there, they happen. They happen, but that air that can set you back. Can set you back. Like this set me back for the week, where at the end of the week I'm still profitable, but I'm probably 50% less profitable just because of that one trade. Right? Just because of that one trade. And it's a trade that's unnecessary because there's so many trades after that. Right? I think after that trade I probably took about 18 trades, right, that did not fail. So it's when you see trades that you feel that you are testing the area, it's best to stay away. So that was what I just made an assumption, big assumption made right there, and that dropped down too low. And this what happens. I want to say, what else could have been to prevent things like that from happening? Certain things that go on in the market is really a matter of you accepting the responsibility. This is one of those things. Like, you accept the responsibility that you made the assumption that this was going to be okay. And that's how we work in the market. We accept responsibility. We're the only people that really get paid for our opinion, right? We make our opinion, and based on our opinion, we either going to make money or lose money. Important thing that is said is that once you start understanding the little parts, and one of the little parts we always talk about, like I said, speed, and speed is a big part of it. But the basis of speed, where does speed actually come from, right? We talk about it, but where is it coming from, right? Where is it actually coming from? So, and you might say, well, why do I need to know? Why should I even know where does it, come from? All I need to know is the presence of it in the market, right? All I need to know is that speed is present, so don't do this, don't do that. That's true. To me, though, the more information that you have in the market, the better you are. I like to read the market and look at the market as in sentences and words. Words and sentences make up ideas. and I want to know the whole idea. So the more information that I can gather from the sentences and words, the more the information that I can contemplate and go over and purge through and come up with a reasonable expectation of profit. So speed, when I look at it, I say it's the derivative of pressure. Because pressure, when you think about it, how much pressure is behind something is going to determine the amount of speed that is involved in it. So just to give you like maybe just a clear picture, if you turn on your water faucet, right, the more you open it, close it, you know, the more speedy the water comes out, the more rate of flow that it is in the water, right? Why is that? Because when you open and close that valve, the pressure behind it, right? The valve opens and closes and allows more water to escape or less water to escape. And why is that happening? Because there's pressure behind the water. There's pressure that's pushing the water, and then when you're pushing it through the little hole or bigger hole, it comes out, the rate of flow either comes out, you know, slower or faster. So your speed is coming from the pressure, right? And pressure itself is a price action principle that is worth exploring for a period of time. It's worth lessons and lessons and lessons. I like to actually go through it, like when we do the course, the actual RBOI course, that all this comes together with. I actually like to do a day on just pressure, and then just spend the month or so just speaking about pressure, because to me it's that important. Pressure in itself is going to actually make it possible that you get those trades that are nowhere near your strike price. Those are the ones I like the best. Pressure makes it possible also that you don't get caught in a situation where, if you're looking at speed in the market, you're saying I'm looking at speed, and then the market slows down to a crawl, and you're like, okay, now it's great because it's slow. It's slow. I'm good. Well, that slowness couldn't possibly be more of a stall than a slow condition. And if it's closer to a stall, then what happens is now it perks the ears or the eyes or the spider senses of those counter trend traders that are in the market. And it's just as many counter trend traders as there are trend traders. And what I'm talking about in this instance is just the direction that the market is moving in. So if the market is moving in direction this way, up, there's going to be a whole bunch of traders that are looking for it, regardless that it's moving up. They're going to be looking at the downside of it and trading off of that. So just counter to the direction of the market. So as soon as they see some type of stall in the activity of price, what's going to happen with them emotionally? They're going to start to anticipate and have hope. That anticipation and hope now can turn into strength on their side of the trade and more pressure on their side of the trade. Our best trades always happen when we have double pressure. And that double pressure means that both sides will be cooperating with us while we are in our trade. Okay? They're going to be cooperating against each other, but it's going to become all in our favor because they're going to have to do the same thing, but for two different reasons. But they're both going to do it with passion. You understand? They're going to be emphatic with what they're doing, and that's what's going to move the market. And when we find those trades, and we can find those all the time because that's essentially what the market is doing all the time, really. Those trades are going to be the most powerful trades that you can take because they're going to be well-structured trades and they're going to be directionally sound trades also. All right? So a lot of times you got to really remember that when you have movement in the market, or say whatever level of speed that you might have in the market, you can have erratic speed or you can have directionally sound speed or structurally sound speed. So if it's structurally sound, that's what I like. If it's erratic speed, no. Because if it's erratic, I have no idea what the market is going to do, because the market has no idea what it wants to do at the time. But a structurally sound speed in a direction is saying to you, it is leaving the footprint saying that one side of the market has more orders in it than the other side. And that's what trading is all about, being on the side that has the most orders. Right? Now, when it comes to doing this with our binary option, timing comes a part of this also, because timing is how we're actually really getting paid, right? Whether we're above or below a price at a specific time. So dealing with the pressure and the time and pressure, which we go through in just life, right? Isn't that what we go in the fight that you go on in life? Is between time and the pressure that you are put under within that time, right? So just like life, trading is all about life and all about the emotions that we feel every single day, right? And all of this is just in the market. Just to continue on with the pressure. So we saw this drop all the way down here. I saw this drop all the way down. So this drop, then we failed out. Blah, 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 right? And we see two-sided trading come back in about 26.17, right? Now, two-sided trading is right at this number, 26.178, whatever that is. Both sides trading two-sided. Market is dead even, right? Then we see at 26.18 or whatever that, we start seeing strength come back into the market for the buyers. I would look for that to go up to about 26.20. See, that's what I'm looking for, and if it does not happen, then I'm looking for the opposite of that, right? Then we get that push up to 26.20 we were just talking about. Right, there goes that push up to 26.20. Then at 26.20, I expect it to maybe slow up, which it did. If it has enough strength, maybe it'll go to 26.23. And if you look at that, it just corresponds with the candle that's before it. And that's what this is. The market is all about, just a repetition of the present candle trying to meet and beat the candle before with. And pressure and timing is going to be all the ingredients that go into what it's trying to do. If it got enough pressure, it will pop off over it. If it ain't enough pressure, it'll drop down, so forth and so on. Just basic understanding of these type of ideas. This is nothing mathematical, scientifical, just nothing with computer code, algorithm. Is none of that. This is basic, just looking at where the pressure in the market comes in. Because where the pressure begins, if you're looking at the market and you know that you're what's that? You're not predicting. No, you're looking. You're expecting. If I'm expecting an event to happen, like I'm expecting pressure maybe in the market at a certain point, when I see it, I know it's just confirming what I already believed or felt to be real, and now it makes me more assured about which direction I'm going to go in with the market, because the market now has confirmed itself. It kind of confirmed what I thought would be going on, its behavior. So that pressure in the timing, I know I keep saying that, and I think I don't even think, I just know it's just that important, because if you have too much speed in the market, we know that we can't time it right when it's too much speed. And binary options is all about just timing. That's all it's about. It's not about anything else. It's about timing. So, like I said, if we got too much speed in the market, we can't time it. So now, if you think about it, if we start kind of knowing or having an understanding of the origin of where the speed comes from, then we can start saying to ourselves, oh, I know it might be a little speedy right there, so I know to stay out, and I know to pay attention, right? Because at those points where you're getting those reactions, you need to pay attention there, because that's where the speed originates from. And where the speed originates from will let us know where we should be in the market in regards with that speed. Whether we should be totally maybe just out of the market because it's just erratic speed. There's no structure in the market. But if there's a level of structure in the market, then maybe we should be just with what the market is doing, right? And when I'm saying speed, I'm not right. We're not, when we talk about speed and pressure, we're usually not talking about a runaway market, right? A lot of times we get a runaway market where you see just the market just blah 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 boom 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 doing like this. This is not a runaway market, but it moved for 4 pips. I don't really want to be in that. No, I like something like this. Move like 2 pips, 2 strong pips, maybe 1.5 strong pips. You see that? Something that moves like with that type of strength. It's a strong move. It's a strong move. So if I'm dug in deep on the move, then I'm pretty confident about what I got going on. And then if there's any errors in judgment, I'm good most of the time, except when I make silly errors like that. And this error I was kind of upset about this one myself, because I knew there was many, like this was like maybe my first trade at that session, and I knew at that particular session there's going to be many good trades from how the market was kind of setting up, even for a holiday season. Even though it's the worst time to trade, I knew that the market may bear some fruit. So when I took this particular trade, I knew I was just presumptive with my thoughts, and this is kind of what happens when you're just a little too presumptive. And it's growth. That's why I kind of go over my trades. If I lose, win, I go over. Even if I'm winning, I'm still going back and trading and testing and going over situations. I know this is Saturday. I know this was kind of long, and I'm always going to give you a talk on pressure, because it's of utmost, I know, of utmost importance, and I know that if you understood thoroughly the concept of pressure, then your trading is going to just skyrocket, period. But when you use the concept of pressure with a confirmation software like RBOI, real-time binary option instrument, when you use it with something like that, and you're going to get these confirmations to go along with it, then your confidence level is going to just explode. And that's really the big thing. That I keep saying that's really the big thing, because so many things seem like they're big things, but a lot of little things are big things when it comes to like trading. A lot of things, there are a lot of big things that are little, because all of these things could trip us up. It's, once again, just like life. You think it's some big roadblock stopping you from doing something, and usually it's some small little detail in your own behavior in life and habit that's stopping you from doing something. And it's the same thing right here. It's like this: if you don't look at those details, those same details will stop you from really being the trader that you can be. And you can't see those details until you're experienced enough to see them and someone shows them to you, right? So I kind of try to be that conduit so you can start seeing these events. Pressure is a primary principle. It's a principle of trading. So it's not something. It's like a pillar. It's not. So it's not a foundation. It's not something that we could just say doesn't exist, right? And not build more on it. So anyway, pressure, and specifically double pressure, where both sides have pressure on them, and both sides work into our favor. So if I was selling, that would mean I have the sellers on my side, and that would mean that the buyers that are in the market are scared and they have to sell to get out of their trade. And now they're on my side also if I'm selling. So I have the regular sellers and I have the people that are unwilling sellers, both joined together, and they're both doing the same maneuver, selling. And that's what I want to do, sell. Right? So everything comes out right. And same vice versa on the opposite side of it, right? Right, of course, neither one of them, they're not doing all this under the same reasoning or enthusiasm, but they're doing the exact same thing, and that gives way to pressure. This is how you get follow through in your trades. This is how you get your trades to follow through, and you get those whole 1 pip strong, I'm in this trade and I love it. I love it. You know, that type of feeling within your trade. And anyone could do this. This is anyone could do this. It's not something that we're saying you got to be like extra special. Yes, I put the software together to help you with it all, so you wouldn't have to take years to kind of figure it all out. But when you put this all together and you start looking at little things, the build up to these conditions, right? What makes the speed? What makes a slow condition? And what type of slow condition is a trap? Right? All of these are little parts that we talk about. But anyway, it's Enrico Jenga on Saturday. Like I said, I know I took up plenty, way too much of your time, but hopefully whatever I spoke today had some value to it. I'm always wary of the point that you might not get enough. So I'm over. We want to explain more and more. So anyway, if you got any questions, comments, concerns, let me know. And listen, also, I might put the link in this one. I'm not sure. But with RBOI, the real-time binary option instrument, I need some. I got a survey actually asking a couple of questions on the actual software itself and about the course that goes with it. So I'm trying to just gather up some information to see what you may like, may not like, so forth and so on, with software, with live training, with a trading course, and so forth. And I would appreciate it if you help me out with that, and I'll leave the link for it here also. All right, it's Enrico Janko. I'm the Signal. My goal is to make you the Signal too, and I'm gonna try to do it in about a week's time. All right, so see you real soon. Happy, what's this, pre-holiday, whatever. All right.